If you want to trade volume profile, this is the video for you. Today in this video, I'm going to walk through a very specific, very simple way to trade the volume profile on your charts. I'm going to show you exactly where to find it on TradingView, and I'm going to show you exactly how to trade it and use it to your advantage. And so, but first we're going to walk through and see exactly how the volume profile, like what it actually is and how it looks. So what is it? So there is traditional volume, which is where we're all used to seeing it right below the candles. That is where you're going to see on the x-axis. Essentially what the volume profile is it just turns it, right? It goes from the bottom. So now we trade it on the sideways, and you're going to see exactly, and if you're watching this video, you might already have an idea of how it works, but I'm going to show you very specifics. And so you see that right here on the chart above, that's exactly what the volume profile is going to look like. And so there's some key vocabulary that you could actually learn from it. There's something called POC, which is point of control. That is where the most volume has traded on that specific price. And so the single price level has the highest traded volume. Now remember that, because that is a very important level. And I actually call that the gravity line. Most folks call it the POC, point of control. And then there is a value area. Basically, it's a range. And then a VAH, VAL, which is the high and the low of that value area. And so all that good stuff. So first of all, choose your platform. There's several out there: Thinkorswim, TradingView, NinjaTrader, Sierra Chart. I actually don't even really, I've never messed with that, but I've messed with all the other three. I prefer TradingView, so I would just load up TradingView. It's free. You can sign up with a free account, and I'll show you exactly where, basically where to find it. And then obviously search, find volume profile. You can actually put it one that puts on the chart, or you can manually draw it. And then also there is a third option, which I'll get into in a second. And then obviously, adjust your settings. You can adjust it to the 70% raw tick size. This is not really, very critical. I'm going to show you my settings. I'm going to show you exactly what I would recommend to use with it. But let's just go through the second step. So the second step is POC is a magnet. That is a magnet zone and a magnet level. POC represents the fairest price of an asset during a specific time period agreed upon by both the buyers and the sellers. Price naturally pulls back to that level, and if price is overextended above or below it, expect high probability reversions back to the median. So essentially what all that means is that, say this is the this doesn't really give a great example. Let's just say this is the POC, right? So price typically likes to bounce off of those, basically where that gravity zone is. And then the third is the support resistance. When price drops to the value area, that is where that is the range on the high, and that is the range of the low. It often faces heavy resistance and selling opportunity. So I actually really like. So if, say this is the POC, right? We are at the POC, and let's just say price is coming down here, right? Bouncing, and it breaks. Here's our two ranges. I'm actually a seller here. And then I am a buyer up here. So that is the key. A lot of folks like to, it's bouncing. So you try to sell here and try to get into this trade. And if it comes down here, you try to buy here and get into this trade. And then maybe if it goes to gravity line, sell there. What I'm focused on is the breakout. I'm focused on the breakout of that. And I'm going to show you how you can do that. Okay. And then step 4 is obviously reading volume nodes. So there is a high volume node. There's a low volume nodes. You'll really start to be able to see what that is. There's a high agreement of fair price here. Price movement is usually slow and sticky. And then the low volume nodes is a thin parts of the profile. These represent areas of very low interest and low liquidity. Because there is little agreement, price usually moves quickly through these gaps. And remember that price moves quickly through those gaps. And that is exactly what I am trying to do. And so, we're going to look for a breakout or a bounce. that we're going to manage our trade correctly. So we're going to protect your capital. Always place your stop loss just outside the value area. This is a, so I'm actually going against this strategy. But I am more of a, I don't really trade normally how you would find it everywhere else. Everybody's saying to short this level, I'm going to go long at that level. That's just how my brain operates. And that's actually how I come up with some really great strategies, because when everybody says sell, it usually goes up. When everybody says buy, it usually goes down. And so I'm using this tool to find those levels. So actually, let's dive into this and let's see how I'm actually using it's specific to like this. So I'm actually going to hide this because that's actually my automated 100% automated tool that I created for this specific task. But if you are interested in finding where the fixed range volume profile is, go over here and go into where the volume based indicators are, and I actually have it. Starred, so it's just down here. So you can actually draw it just like that, and then here you go. So there is our levels. This is exactly where you would find a breakout. This is exactly where you would find a breakout on the downside. So very interesting, such a great tool to use. I actually adjusted it as well. So you can actually copy some of these settings if you want it to look like mine. So just scan this, scan this, scan that. It's exactly how mine looks. But so this is great. This is great because our strategy basically, lets us know, okay, let's just trade these bounces, right? But where is the bounce? Where's the bounce? Is it right here? Is the bounce right here? Would the bounce have been, at this level or at that level? And that's kind of what I struggled with at first with this. And then I realized that there needs to be defined levels. So let me introduce you to my way of trading this, and I call it the gravity zone. So, and I'm actually going to, let me make this a little bit bigger so you can see that beautiful dashboard up there at the top. And so up here, so this is actually a real live trade on here. So this is the QQQ I'm looking at. So in this particular trade environment right now, we have, so there is at this current time, there's a lot of volatility. The VIX is up right now. There's a lot of uncertainty going on. So if you're watching this years down the road, it could be a lot more chill, right? But right now, we're in a high volatile environment. And right now it actually just did something interesting. So it's actually doing something interesting that I like. And this is breaking out of the zone. So you know that zone that I was talking about, there's a high and then there is a low. This is exactly what it is doing right now. So what does that mean? Well, first of all, you get a nice little entry candle right here, a little triangle. And then up here, there's an actual contract where it would recommend. So in this recommendation, there's a recommended call option on the QQQ 3626. And right now it's going to start to track it. And so the reason why it's going to start to track is because there is a trade on. So this is actually broke out of the gravity zone. So you see this right here, this is the gravity zone. That means that any breakout above is a buy, any breakout below is a sell. And that's as simple as that. And I could have even painted this on the chart as well. We'll put a big buy here and a big sell there if that would make it easy. But it's very simple because there's a green line. When you see green, it goes above it, you buy it. And so it's kind of doing it all for you because so this is where I struggled with initially because I wasn't sure where the best level for this above and below would be. And as you see right now, this is a very intriguing because this was a massive resistance point. So there was a lot of resistance right here, a lot of resistance. And it's still, and I wouldn't even really consider this completely broken out because there is a resistance point that it just hit right here as well. But it could chop from this. And you can see right here that there is a wide open space, a massive wide open space above this. So if it can break out of this zone, there is a good chance that it goes straight through all of this into the next major level. And so where is the next major level? Well, in this particular time frame and structure, it would be up here. It's around 616. It's exactly where it'd be, just because there's a little more volume right here. There's actually 2 resistance points, and I actually teach this to my members, what to look for, how to look for a specific target, and things like that. But like I said, in this environment, anything could happen because there's just a lot of volatility in these markets. And so you can see this right here. I mean, there was a big gap down, and then it just went straight back up, gap fill, and then now we're at a specific zone where a potential buy opportunity could be. So here's what I would want to see if for this to actually be just for me to sign my name on it and to say, yes, I'm good for this trade. So currently it is at the end of near the end of the day. We still got about a couple hours to go, or about an hour and 20 minutes to go. And so if it can break this and close, so if we can actually close above this, so you see here how this candle, and let me actually zoom up on this. So you see here how this candle is, it went right through this line and is pulling back. It needs to come up here and confirm into this green zone. And again, I teach this to all my members exactly how to what to look for. But if it closes up in this green zone, that is a very good sign that, okay, we may have broken out of this zone and we may continue to go upwards. And so that's exactly what we would look for in that scenario. And then obviously if it's the downside, you're going to do the exact same thing, only it is to the downside. And what's great about this specific tool is that there is a lot of other things to consider. Number one is the drift percentage. And so I basically created the drift percentage because I want to know how far price is from the gravity zone. Why? Remember I said that this is an important level. Well, this really is a magnet level. And so a magnet level would be price does want to come back into this price. It wants to come in back into this 607.90 or so. And it wants to just sit here because that is where most of the volume is. That's where a lot of orders are. That's where liquidity is. And that's what's going to happen if it comes back into the zone near to this gravity zone. And so look out for that. So what I actually recommend my members to do as well, because it would, a lot of the times it acts as support as well, right? It'll act as support. So you can even have, so if you do get into this trade, you can even see how this big, there's a lot of volume right here. You can even have a stop loss somewhere right here just to kind of get yourself a little room, give yourself a little bit more room, get yourself away from the gravity zone a little bit. Or you can actually just use it as a hard stop. Either or is okay. And I'll teach exactly like in an environment like this, I'm getting out the gravity zone because I just don't trust the markets. And it's almost like my snap trades where I'm just trying to get in and out of these things quickly, right? Because at any given time, you could see something like this where it just falls. It just falls straight down. And so that is something that you would want to look out for. So again, this is a very quick demonstration of using the volume profile. If you want to use it with just the TradingView indicator, you can. It's a little more. It's not as intuitive, but basically, what you would want to look for is just the small areas of less volume, right? So just exactly what we saw with the tool, and we want to see a breakout of that, right? So in this particular case, we would want to get we would be interested in this as our trade. So this whole thing right here as our trade, and honestly, my system gets in a little bit earlier just because I get the alert. I want to know how close it is to breaking, right? I want to know a little bit early. That way, in case if it does, I'm ready. And so that's exactly why it does that. So, so if you want to do it manually, use this. It's 100% perfectly fine to do that. If you want to use it the way I'm using it, get the gravity zone. I'll have a link below that you can actually grab this thing. A great price. It's not a free indicator because we put a lot of time, effort, and testing into this. Also updates that there's a small one-time charge, but then after that, that's it. You get it for free and you get all the updates after that. But yeah, it's a really great intuitive tool. What I love about it is the simplicity, right? The simplicity of finding the breakouts. Yes, you can easily manually do it. The issue with manual that I found is that you look at the charts today, you go tomorrow, you have to redraw them, which I guess isn't that big of a deal if you're only looking at one chart. But if you're looking at several assets like I am, I'm always looking at different stocks and everything else. You're going to want something automated. And that's why a tool like this is so great. So, all right, well, that is going to be that's my little demonstration of the gravity zone and how you trade volume. Enjoy your day, and I will see you guys later.